About 210 billion naira was erased from the market value of the Nigerian stock market last week on a massive sell-off. The stock index erased 2.4%, the broad index down to 24,719. At the fixed income market, treasury bills and bonds were largely negative, well, primarily because of the new auctions and the mop-up by the authorities, the central bank, and the debt office. So what's the outlook for this week? Well, a little bit tepid. Then last week we had a Yuan conversation joining the words on the street. So let's bring in Robert today from Afrinvest. He's the investment analyst. Robert, thank you very much for coming.
Thank you, boss.
Okay, we appreciate it. I hope you had a nice weekend.
Yeah.
Okay. Put some smiles. So I hope your mood hasn't been dampened by the Doha disappointment.
Well, general investment is not looking good, but there are still risks.
Okay. Now talk to us about wrap up last week for us in few words from the fixed income space.
Okay. What we saw last week was more of investors taking advantage of the action that took place last week. Remember that the Debt Management Office on Wednesday conducted an auction, a bond auction for three major instruments. That's the February 2020, the January 2026, and the March 2036 instruments. What we saw was more of investors reacting to the recent inflation figures, and we saw that most of the marginal rates for all the bonds closed at least 0.7% higher than we had in the previous auction. But overall, the week was, market traded sideways because we saw average rose by about 0.4%, but a lot of opportunistic investing that took place along the yield curve. So the market was really sideways, but on the average, it was generally bearish.
Yeah, so let's fast track to this week, Robert. I'm sure you folks have looked at it at Afrinvest. So, do you think the market has priced in all the heat, the fever about inflation heading towards 15%? Do you think the market has priced that in, and if priced in some of the earnings as far as stock market was concerned, if priced in the debt auction, we won't have another one until May, according to the calendar. So, do you think the heat is out of the market right now and things will begin to normalize?
Well, we can't say that for sure. What is obvious, what is clear is that the market is still trying to, take this bit of every news flow one after the other. Digesting it at once will suffocate the market, and we would still expect some reaction to some of the events that have played out last week, particularly on inflation. We can never have enough of that, because we've seen that over the weekend there have been monetary policy news flow that will also affect how the market can be priced in terms of reaction to the inflation figures. But on any side for equities, we are not also sure that the market has fully digested some of the news flow. You recall that we are just coming out of the 2015 earnings season for the full year, and this is first quarter. A lot of companies are just releasing their results, and what we will see play out even this week will be some reactions to some of these companies' releases, because obviously these are the factors that will drive market performance going into the week.
Okay, I'm sure you analysts at Afrinvest must have chewed over the Yuan conversation, the Naira-Yuan swap, the new deal on the street. Talk to us, what's the thinking in Afrinvest about this?
Well, for us, we are still waiting to see, get the full information about this arrangement. But by and large, what is instructive to note is that the government is seeking investment in China, and this is expected to further boost domestic performance of most of the infrastructure deficit that the country has been witnessing for some time. With such an investment coming into Nigeria, we will definitely see the impact within the local economy, because we have been earlier bullish on what the economy portends in terms of the 2016 budget, and this kind of deal coming up, if it eventually goes through, is something that is positive from the fiscal side in terms of how it will affect people's job and consumer spending and the likes. But from the monetary policy angle, there's so much to be analyzed, as to whether this deal is the best that the country can get for now. But if we analyze from the perspective of the dealings with the Chinese government, and China is becoming a very strong trade partner for Nigeria, and what this deal portends particularly is that it's going to reduce the pressure that may arise in settling some of the deals. I mean, FX pressure that may arise settling some of the deals between Nigeria and China. But the overall impact on the dollar may not be, may be neutral. May be neutral. I think that's the way to look at it.
Robert, in terms of the financial assets, do you think this will mean anything for local foreign investors as far as stocks, bonds, and treasury bills is concerned? Do you think the Yuan currency conversation will be any part of the consideration, or is just business as usual? Will it be, as far as those assets are concerned?
Well, we do not think anything has materially changed. This is more transaction between two countries, Nigeria and China. And you will recall that most of the issues that they have around the financial market, they are traceable to FX, our FX concern. And except that if this is not properly communicated to the market, it can even dampen sentiment. If some investors are thinking that a partnership with China, with the Yuan currency that has been seen to come under some pressure in the last 1 year, can further affect the stability of the external reserves. In our view, from the way the transaction is coming up, even though we don't have the full details, we don't think this will be so much of pressure, since some percentage that will be kept in the external reserves, can help offset some of the liabilities that we are taking up from China. So, but it can even have a negative impact on the market if the information is not properly digested. But fundamentally, nothing has changed, and the market will still continue to price in all other issues, particularly around the FX concern.
Okay, finally, a short one. Who do you expect to give the market further and full communication as far as the Yuan currency conversation is concerned?
Did you say who?
Yes. Which government agency?
Well, it's going to be a mix of the two authorities in question now, the fiscal authority and the monetary authority. What we would expect is that there should be further communication to the market, as there have been conflicting stories as to whether that arrangement was even reached at all over the weekend. So from the fiscal side, perhaps the Ministry of Finance and of course the central bank, need to come up with maybe an articulated statement, that can properly guide the market. We recall that some of the issues the market has been facing has been lack of communication, and a lot of investors are not aware of the policy direction. So a news flow as this would be properly packaged, communicated to the market, so that it can generate the positive response as required.
Robert, get back to your work desk. We appreciate your time wrapping up the program for us, and the rest of your team at AfroInvest, investment research at AfroInvest, one of Nigeria's registered and licensed investment and securities trading firm. Okay, that's about all for today on the program. Don't forget, there's no other conversation than the Doha talks disappointment. Join us at 1:30 CET, Nigerian time, or Central European time, or West African time, whichever way. 1:30 Nigerian time, we'll continue the conversation about the Doha and how that is damaging the global markets this Monday. You need to follow the money. Oil is the culprit. I am Bosun. I do have a great day, and I'll see you really soon.